Hi friends, welcome to Baroda BNP Paribas Connection Series. As you are aware, India's GDP grew by 8.2% during the financial year 23-24. Now there are some sectors which are core to the growth and development of any nation. Manufacturing is such sector. Today, we are going to talk about manufacturing sector, and we will also talk about our ongoing NFO, which is the Baroda BNP Paribas Manufacturing Fund NFO. The NFO has already started and it closes on 24th June. A Baroda BNP Paribas Fund is suitable for investors who want focused exposure to the manufacturing sector companies. It is also suitable for investors who want to diversify their portfolio holdings. This fund is managed by our fund manager, Mr. Jitendra Sriram. He has a rich experience of 26 years and manages other funds such as the large cap fund, the business cycle fund, and manages the equity portion for aggressive hybrid and multi-asset fund. So let's begin. Sir, we have a few questions for you.
Good afternoon, Shalaka. Happy to take the questions.
Sure. Why, according to you, is the development of manufacturing important for India? Like, can't we just skip the whole manufacturing renaissance and move to a service-led growth?
Very interesting point. Good evening to all the viewers as well. So what I would say is that India virtually did what you just spoke about, that it bypassed the manufacturing revolution and went directly into services. Reason being the large technical manpower that we have, plus the fact that, we had a lot of English speaking capabilities compared to other populous nations like China, etc., in the late 90s. So when computerization was really taking off, we technically bypassed manufacturing and went directly into services. However, the problems became evident a little later, and the problem is very simple. Labor, which is exiting farmlands, they are not technically adept or capable of being absorbed by the services sector, which is a far more skill economy or a knowledge economy kind of a place. So what you need is manufacturing being a stepping stone where people migrate from farmland. So you need a whole battery of, welders, masons, electricians, machine operators, all these kind of skill sets to absorb labor leaving farms as farms get mechanized. And as they evolve over time, as knowledge levels improve, then it moves on to further into services sector. So it is possible, but obviously it creates a little bit of gaps of how do you absorb this huge amount of workforce that India has in the agrarian sector, and how do you handle those people leaving it? So that's why it is probably putting a little bit of a cart before the horse kind of a thing, and you need manufacturing as a stepping stone to answer your question.
Manufacturing currently contributes 17% to India's GDP. However, the government has set a target of increasing this to 25% by 2024. What do you think? Is it realistic or is it too ambitious?
Yeah. So if I look at this government's target that they have put out, that in the 100th year of our independence that we wish to move to 25%, whether I feel it's realistic, I think it is a big yes. The reason being that at the turn of the century, we were roughly in the 27-28% as manufacturing as a percentage share of our GDP. From that point, as services growth accelerated, it has come down to roughly about 17%. So what we are trying to do now is re-kickstart this entire manufacturing process and take it up. My point is very simple. See, these are long-range targets, so you could have a little bit of ups and downs in this. You have cycles, you have commodity prices, various things which are not in our hands exactly. But let us assume a simple case that from today that we speak, which is 2024 being a base year for us, say in the next 23 odd years by 2047, if we are even able to push up GDP growth and grow at a modest 6%, something we can comfortably do, And if we even assume a 500 basis point increase in the share of manufacturing, that is, manufacturing moves up from 17% of GDP to 22% of GDP, the manufacturing landscape of India will be more than 5 times what it is today. And I think that is the big picture on manufacturing. So whether we finally fall a little short of 25, whether we exceed 25, all those are more academic questions. I think the big scope is that, with a 500 basis point improvement in manufacturing and a 6% GDP growth, where the denominator and numerator are both growing, we can see a significant growth in the manufacturing landscape.
And what do you think are the factors which would be driving this growth?
So that's a very interesting area because there are multiple things that are happening both at a global level and at a local level. So if I first take some of the things that are more global, the first thing that is actually changing the way people are aligning is geopolitics and this whole concept of nearshoring or friendshoring. Look at the friction that has been there between US and China with relation to Taiwan, the foundries, the semiconductor industry there. Point is very simple that China obviously has certain interests in that area, and US does not want to be vulnerable to its semiconductor supplies given China's activity in that area. To that extent, they are now incentivizing investments either in their own borders or at nearby territories which are friendly to them, like Mexico. So that is one concept of this nearshoring area. I think we went through an identical phase when we had the Russia-Ukraine conflict. A lot of our platforms a few years back were of Russian origin. So whether we are submarine platforms, whether our tank platforms, or whether our fighter jet platforms, the MiG series, MiG-29, Sukhois, all this were all of Russian vintage. The issue there is that if Russia is itself at war, the factories in Russia will be more focused on keeping their war preparedness at a high level rather than exporting to other markets around the world. So it's not that Russia is hostile to us in any manner, but priorities of people do change. And for this, Indian government had to embark to create an alternate supply chain so that its own preparedness is at a high level. So they had to go for this Atmanirbhar Bharat, moving a lot of business in-house, developing local vendors, or probably just seeking critical components from abroad. So one concept is this concept of nearshoring, friendshoring. Second, I would say is this whole concept of climate change and the investments that it is throwing up. This whole growth of renewables piece, energy efficiency has become a norm in everything, whether you're manufacturing a product, a service, how well and how low a carbon footprint you leave behind so that you keep the earth a lot less warmer than what it is becoming. Those have become mission critical areas. So that whole concept of climate change and sustainability has become a big global theme. The third area, which I would say has become very critical, is this whole concept of Industry 4.0. Again, a global theme. See, all these trends came together, which is computerization in the 90s, which was Industry 3.0. And now you're moving to give intelligence to manufacturing. You're putting sensors on everything so that you can read the data that is coming out, do preventive maintenance and all that. And that is again becoming a global theme in manufacturing. So all that is again forcing a whole host of investments. Now, to add to that, I would also add a fourth point, which is that the world is consuming data at a humongous pace. So what is happening is that as our phones, our computers, our tablets all become more evolved, and we migrate from 3G to 4G to 5G, the data consumption is exploding. Now it requires a whole new chain of data storage, data maintenance, data analytics, and all that is again driving this huge demand for data centers and various other things. So I would say that these are four global trends that are largely driving the reinvention, reimagination of manufacturing. To add to that, there are a couple of things that Indian government has itself focused on. So one part that India has focused on is the area that, we spoke about Atmanirbhar Bharat in relation to the Russia-Ukraine conflict. To add to that, the other area that we are focusing on is that India has been running a current account deficit for many, many years. And to address that, government wants to incentivize local manufacturing. So, you don't constantly be on this umbilical cord of, sourcing from abroad and all that. So they launched this whole scheme of PLI schemes, production linked incentive schemes across multiple sectors, almost 7 or 8 of them. And this spans across autos, industrials, capital goods, even chemicals, pharmaceuticals, and all that. Now, this is triggering a whole host of investments as people indigenize technology from abroad so that they can manufacture it in-house. So that is another big theme that is playing out. And I would say the other part, which is going to be a little bit more in the nascent stage because it will take time to evolve, will be the semiconductor manufacturing because we are at a nascent stage. And we need to start manufacturing chips because electronic imports is our second biggest import item after oil. So at some point, the government will want to ensure that we reduce our dependence on imports on this critical component. And we have recently seen three schemes or three awards being made of these semiconductor investments facilities in India. I think over a period of time, these will evolve and to make sure that India develops this. So all this is the basic backbone of what is driving manufacturing across the board, which is what we are very excited about.
That's really nice. It's been put really well. And so, can you give some examples where we can see the manufacturing growth currently happening?
Yeah, so if you look at it, let's take some basic examples. So you have one, the huge focus on renewables that is coming in. So India has added a tremendous amount of renewable power. So you're seeing this huge investments come through on solar power, wind farm power, and all that, which is one example of climate change theme that I am talking about, that, where we want to move to cleaner, non-fossil fuel-based energy going forward. So that is one example of that. The second is this huge growth that is coming in data centers. I'm sure our viewers will also remember that in the past couple of years, there was a small instance where, data pertaining to Indians was being stored abroad by all these mega hyperscalers like Meta, Facebook, LinkedIn, and all these Instagram and all this. Now, Indian government mandated that data pertaining to Indians be stored in India. Now, what that has done is that it has forced a lot of investments to be set up in India. And data centers is not just about having a server and storage space. It is a very complex setup because you need absolutely zero failure rates on power. So you have one, which is a power grid connectivity. Number two, you have a battery pack to back it up. Number three, you have captive gensets to back up even if the battery drains out or something like that. Then machines generate a lot of heat. So you need high voltage AC systems to keep these machines cool at all points of time. And then the reinforced structures of cement, concrete, all that to bear the huge load of these heavy racks of servers and storage devices. So data centers is another big area of investment. Then we have seen in defense, India first embarking on this jet plane deal relating to Tejas, which is the first indigenously developed Tejas jet, which is a replacement for our MiG-21 aircraft, which was went through its life cycle of service. So that is something that is hugely kicking in, that, we are trying to indigenize a lot of these items and focus on the Make in India label there. So that is something which is happening. So I would say these are all certain examples of how things are shaping up in India as well because of the fallout of these themes that we spoke about earlier.
Can you tell something about Baroda BNP Paribas Manufacturing Fund?
Yeah. So broadly, this fund is going to be a flexi cap offering in a sense that it will invest across the market cap landscape. So anything above 3,000 crores is a cutoff for small cap funds. Moving right up to the very largest companies, it will look at anything that is exposed to the manufacturing industry. Track the NSE manufacturing index. So broadly, it is something that is look at it this way, it is anything which does not encompass the service sector of the economy. So if you are saying that from a GDP perspective, we want manufacturing to grow at a brisker clip from here, it is something that should grow faster than the GDP growth, because not only is the GDP growing, but the percentage of manufacturing, the government is very serious to expand that. And this should piggyback on that theme. So this is basically something that will look at that entire concept and look at what all areas to invest in that. Now, within the index, the major sectors are areas like auto and ancillaries, industrials and capital goods, oil and gas, petrochemicals, metals and mining, chemicals, pharmaceuticals. These are the large sectors there. So this fund would have exposure to each of these large areas which are mentioned there in the index.
Okay. And what are some of the themes that you're looking at?
So broadly, I would say that from a theme perspective, at this point of time, auto is something that is surely very interesting for us, because auto, we are seeing a lot of transition happening from IC engines to hybrids to electric vehicles and all that, and that is forcing a lot of change also in the downstream ancillary sector. So that is something which is interesting. Second part I would say is pharma, definitely. We are one of the largest API suppliers the world over. So clearly there is a massive export opportunity there as well, apart from the local opportunity that exists. So that is something which is fairly interesting to us. I would also say that there are pieces of capital goods and all that which are quite interesting given the government thrust on capex and all that. Government is doing a lot to facilitate investment. So whether it be port investments, airport investments, trying to cut logistics costs, or even certain other stuff like, trying to undertake a lot more of road building, railroad building. Railways is one of the big focus areas on capital spending. So all these will require certain pieces of industrial goods to be flowing in there. So these are certain themes that we'll definitely look at.
Okay. Uh, so there are a few questions that we've received in comments. I'm going to ask them now.
Sure.
The first question is, I am 30 years old. How risky is the fund for me?
Sure. So I would say the first and foremost is, compared to any diversified fund, any sector specific or theme specific fund will be a little bit more volatile than that. But having said that, if you look at the macro picture of what the government aims to do with relation to manufacturing, I would say that it is something where one should see slightly better growth. But do remember that there will be cycles in it too. It is not only top line we are talking about, the revenue growth, which is linked to more the GDP or the macro targets the government has. There will be cycles which emerge also from energy costs, from commodity prices, which will lead to swings in margins. So those are areas one needs to be cognizant of, that manufacturing will face its share of up and downs over a journey. But these are something that hopefully will play out over a period of time, and one should be able to ride over them.
And I would also like to add that it is a multi-decade theme. So it is no, if somebody invest in the fund, they should look at long-term investment rather than a short-term.
Absolutely, because see, it is a multi-decadal theme, because even the government's own target is something from here till 2047. So it is not like a current fad or a fashion that is going to last only a couple of years. And as I mentioned about the index, which includes autos, industrials, chemicals, pharmaceuticals, and all that, it is not a very narrow theme that one can technically get boxed in. That valuations rise a bit too much in one narrow theme, and then you are left a little helpless on what is to be done with it. You have ample options to shuffle within these large sectors itself. So it's not something which is very narrow in its approach overall.
And how is this theme different from a normal flexi cap or a normal diversified fund?
So look at it this way. Let's just start from the very macro picture. India, 54% of its GDP is accounted for by services. The large services in India are the BFSI space, which is banking, financial services, insurance, all the ancillary services that comes with banking, NBFCs, etc., etc. Then the second part is you have IT as a big service area. So information technology, coding, everything else is a part of the second service area. Now, in GDP, 54% is services. In our manufacturing index, that 54% is just not there. So by design, it will not have exposure to that 50%, half of what you have in a flexi cap or a large cap offering, because it is going to be looking at only the balance side of it, which is dedicated to manufacturing. So by nature, by design, it is designed as being different from any of the larger product slates that are there in the market.
So it is a true diversifier for any
Yes,
portfolio in a sense.
exactly.
We have one more question from the audience. What is your strategy in volatile market?
So, as I mentioned partly in passing about the fact that you have multiple options on sectors. It's not a narrow choice. So supposing, I had to focus on only one small sector, and if there is a lot of volatility coming from commodity prices or crude prices or something, I don't have any other leeway to play around. In this case, what will happen is that I have some leeway to move around to slightly more defensive areas. So whether it could mean whether I move to pharmaceuticals, or in certain areas, I move to regulated entities like oil and gas, etc. So these are areas that I can look at to mitigate the impact of volatility, which comes along with any market-related investment. So I can do that. I won't say that it will eliminate volatility, but it can at least mitigate the effects of that volatility.
So, okay. If there are any more questions, kindly type them in the comment. In the meanwhile, I would like to tell the audience, I would just like to summarize what we've spoken so far. One, manufacturing is a multi-decade theme. It is something that we are going to focus on for the next few decades, at least. There are a lot of global factors and a lot of domestic factors which are driving this theme further. Globally, there's geopolitics, there's offshoring, nearshoring, there's climate change that's driving it. And on domestic front, we have push from government sponsored programs like the PLI programs and Atmanirbhar Bharat, which are driving this sector further. Now, coming to our fund, Baroda BNP Paribas Manufacturing Fund, it is a thematic fund, and we would be investing majorly into companies which are in the manufacturing sector. This fund would be managed by Mr. Jitendra Sriram, who has about 26 years of experience in the industry. And it is a broad theme. It is not a very narrow theme. And it is a theme which is meant for long-term investing. With that, I would also like to tell the investors that their corpus will be at high risk. And remember that the NFO closes on 24th of June. So be a part of India's growth story. So invest in the fund and be a part of India's growth story. Okay, we've got a few more questions here on the chat. With the latest politics and coalition government, etc., whether the focus on manufacturing may be diluted and has accordingly the buzz reduced.
Okay, interesting point. But I would summarize the election in one thing. See, forget about the seats and all that news flow. I'm sure you got many more of it from all the newspapers and all that. I would just say that to me, the most important aspect was the ruling party had a little bit of lower seat pickup in the rural markets. So whether you call it rural distress or whether you want to term it as some other factor, the there would be a little bit of a policy tilt towards rural India. Now, what that can mean, you may see a little bit of a step up in areas like irrigation projects, which requires pump sets, which requires piping, or it could mean construction related for canals and stuff like that. So all I would think is that one part could mean a little bit of tilt on the rural, and it can also encompass certain other things, which means that you could have a little bit more uh, concessions given for crop protection, which comes under chemicals or fertilizers and stuff like that. So one may need to slightly at a nuanced basis look at differing exposures at that. But does it change the overall concept of manufacturing? I don't think so. And clearly, a lot of what the government is articulating with regard to defense, railways, roads, uh, all the infrastructure investments is much, much longer term. So I don't see any issue on that. Yeah, in the near term, you may see that you could have a little bit of a higher push towards rural markets, which will mean we'll have to tweak some of our exposures to capture that uptick via all the sectors and themes that I just spoke about. So that is where I would put it.
There's another question. What is the fair assessment of the growth of this fund vis-a-vis other high-performing funds as on date?
That's a difficult one to answer, but let me attempt it in a different manner. See, from the turn of the century, if you look at services sector, services at the turn of the century before Y2K was 44% of our GDP. 2023-24, it was roughly about 54% of our GDP. And what that has meant in this intervening period is that the services economy grew at a 10% CAGR on a annualized basis because the denominator was growing at certain percentage, plus you had the uptick that the numerator also grew by 10 percentage points over this 25-year period. You have seen the impact of all this play out on private sector banks, on IT stocks and all this over a long period of time. You can see the prices over how they have done. All we are seeing now is that government wants to do an encore now with manufacturing like that. So they are trying to move up manufacturing by a certain percentage point with a GDP that is already growing. My take, I think it should be something superior to what the country's growth is because the aim is to expand the numerator as well as the denominator. So you should get something ahead of market growth is what our expectation would be here.
And is it the right time to invest at such nifty levels?
Yeah. So in a sense, that is what I mentioned about boxing in. All I'm trying to say here is that you have multiple choices. And see, there could be certain flashpoints that, certain pockets of capital goods could be very richly valued or certain names that are very richly valued, but we don't need to go into that. Overall, it's an economy that is growing. Commodity prices are broadly under control. Crude prices are broadly under control. And if I look at the frontline names, we are still not in a hyper valuation scale. We are at trading at about 20 times March 25 numbers. So it is not a euphoric valuation. So I think we should be able to find enough names that can merit investment at this juncture. We may need to tweak in a little bit of sectors to avoid these little bit of flashman. But see, every market is like that. There will always be some flashes of exuberance, some flashes of depression. You have to sidestep those which are exuberant and focus more on ones which are like offer a better price value equation.
The question is, as human resource towards manufacturing sector is depleting in our country, do you think it's a risky industry to be?
So I would,
Do you think it's a risky industry? A lot
sorry,
of people, I believe
sorry.
what they're trying to say is a lot of people are moving away from manufacturing sector.
I don't think so because the big focus area, the big capital investment, if you look at the way the government is progressing, the way the PLI schemes are being awarded, a lot of capex is coming in these areas. Incidentally, if you even look at capex for last year, the biggest capex amount was spent on renewable power last year. So among all the sectors, so all we can see from the data is that there is a lot more emphasis on manufacturing, which doesn't gel with this kind of a commentary, because this is something that is clearly a agenda item for the ruling party. Plus the fact that India needs to do this to absorb all the labor that is leaving farmlands.
Now we'll just take we'll answer them separately. First question is, what do you mean by manufacturing sector? Does it include cement, power, engineering contracts?
So, what we mean by manufacturing, if you look at it, contracting business as such comes under most construction services. So, it is not technically manufacturing. But if you look at cement and the fact that, power is partly a manufacturing unit which generates power, power as a seller could be a service, but power equipment and all will come under manufacturing. So, power equipment and also cement would come under manufacturing.
Uh, Are there any defense stocks included in this
They
one?
are part of the industrials capital goods exposures. So it is part of that 20% bucket or the approximately 20% weightage that the manufacturing index is.
And will the falling US dollar have any impact on the fund's performance? What strategies do you use to combat this?
So one part is that you can falling. I presume they mean the appreciating US dollar because the US
Yes,
dollar
yes.
has actually gone up vis-a-vis the dollar, vis-a-vis the rupee. I would say, you can always look at exports as a proportion of portfolio to hedge these risks. So there are enough exporters available in areas like auto ancillaries, also in areas like pharmaceuticals, where you get enough export plays to hedge or mitigate the risks there on the impact of the US dollar.
Okay. And okay, there are a few more questions. I think we'll just address them quickly. Will you start investing in stocks from 24th June?
Let me explain the process here. What happens is there is a couple of days gap. So within 5 working days of 24 June, the units are allotted. We are technically allowed to invest after the units are allotted. Till then, they remain in sovereigns or overnights, which are zero capital risk products. And our aim will be to get up to 65% within 1 month and about 90% in 3 months from the allotment date.
Last question. Are you not entering markets at an artificially high price?
So, see, market overall, I don't think is at a high price because, as I mentioned, it's still trading at 20 times 25 numbers. Having said that, flashes of exuberance, flashes of over optimism, or any market will have these situations at all points of time. We'll need to avoid that. So, that is something that we'll need to constantly be on our guard to sidestep those hotspots and move into more uh, areas which offer better price value equations.
Okay. There's one last question. There are many existing or even new NFOs in manufacturing fund. How will Baroda BNP Paribas Manufacturing Fund be different, which may create better corpus than other manufacturing funds?
Okay, so obviously it will depend on the time we are investing. So I can't hold myself to what I speak right now because the date of investing, what stock prices exist at that day will dictate how we invest and all that. But to put it slightly differently, I would say that if I look at a lot of our peers right now, many of them are quite overweight on the industrial space, which to our mind at this juncture seems like an area which has lot more hotspots than other areas which look far more appealing. So if I had to create a portfolio at this juncture, I would probably be more exposed to those areas, excluding the industrial capital goods space, which is looking slightly more flashy to me. But obviously is not something that I can again commit to, because on the day of investment, if there is a correction by that time and if price value equation looks better, I could enter there. But at this juncture, that's the snapshot of how it appears.
Okay. So let's conclude this call.
Sure. Thanks a lot. Thank you so much for your time. Thanks, everyone. And great to speak to you all.
Thank you so much. And remember, the NFO closes on 24th of June. So do invest in the fund and be a part of India's manufacturing journey. Thank you.
Thank you.